Coming up today, stocks finished the best month of the year. Will this rally last? The latest shopping data from Thanksgiving, bond yields fall lower, and the interesting group of stocks I think could be next to rip higher after we got important news today. You don't want to miss this one, guys. It's been another great week. Let's enjoy this one. And welcome back to the Daily Market Review, everybody. And before I get into this stock that ripped up 89% today on news that Don Trump Jr. joined the board, also getting some comments from Elon Musk, I think could actually be the next group of stocks to rip higher, and with good reason. So I'm going to give you a bit of a bullish thesis presentation, along with sharing with you some other stocks in this industry I think could be primed to rip up next. I've certainly got my eye on them. First, since it's Cyber Week, and I've had a few of you guys request it, I'm going to extend the 33% discount to all Click Capital products and services, including my Stock Picks service, with my Stock Picks account actually just having its best day yet today. And stick with me because later on in this video, I'll share with you guys a couple of stocks helping to drive these gains. And so this was a new account I started back in June. As part of $1 million challenge, it's already up 33% since then, and that's with no leverage and no concentrated bets. With my latest pick I gave out last Sunday, already up over 18% this week. And so if you sign up for this one today, you'll get my next pick like I send out every Sunday morning, where I'm investing mostly in exciting low-priced, small-cap growth stocks. And I've had the portfolio well-positioned for current market conditions. Or if you're interested in getting all my custom trading view indicators I've developed over the last 9 years that are unlike anything else out there, that I use to manage my own 6 portfolios, including the Stock Pick service and the new Swing Alert service, and that you see me use in these videos every day. So check those out if you're interested. You can also use the code SWING33 to get a permanent 33% discount. Or if you'd like to give yourself the financial education you never got from school, then you're welcome to join my online course with lifetime on-demand access to 25 modules over 12 hours in length. I spent over 6 months making this course, sharing all of my knowledge, experience, and strategy I've learned from 20 plus years of trading and investing and working at an investment bank. This will give you the ground up knowledge of all important topics across personal do-it-yourself trading and investing. And for anybody else who's interested in joining my new Swing Trading Alert service, spots are quickly filling up. Currently at time of making this video, only 19 spots left, and I'm expecting them to be all gone by sometime tomorrow, as I can only allow 300 members onto this service. And so I've created a new real money trading account for this service as well. All alerts sent the night before I trade them with full transparency, trade screenshots and performance tracking inside the private members area. And for anyone who wants to go big and make 2025 your best year yet, then I recommend one of the Click Capital packages, where you can combine our products and get the biggest permanent saving yet, with limited spots available for these packages as well. So if you're interested in taking advantage of this special offer, then click the link below this video, head on over to our website clickcapital.io and use the coupon code SWING33 to lock in your permanent discount today. So like I said, for the Swing Alerts, spots are quickly filling up, after which time I'll be closing it down to new subscribers. So big thanks to everybody who's already jumped on board with me on this. I'm really excited for the journey ahead of us, and trading has already begun in my new account, and next year is shaping up to be another great one. Okay, back in the daily market review, and that stock I was talking about, Unusual Machines, up 89% today on 62 million shares traded. This is a really small company, 155 million market cap, and they're a drone company. And why they're trading up really high today is they just announced Donald Trump Jr. is joining its advisory board, coming at a pivotal time as the company is working to bring drone component manufacturing back to the US. CEO saying this new appointment will be invaluable as the company expands its business, with Trump Jr. saying the need for drones is obvious. It is also obvious that we must stop buying Chinese drones and Chinese drone parts. I love what Unusual Machines is doing to bring drone manufacturing jobs back to the USA, and I'm excited to take on a bigger role in the movement. Still a very small company, third quarter sales only 1.5 million. However, this could be the beginning of a much bigger, more secular movement, especially after we just recently heard from Elon Musk criticizing the F-35, saying it's required to be too many things to too many people, it's expensive, complex jack of all trades, master of none, and manned fighter jets are obsolete in the age of drones anyway. We'll just get pilots killed. And so Musk heading up the Department of Government Efficiency, going to overhaul US government spending, really cut down on waste, increase efficiency. This could be one of the big spending programs that comes in the firing line. And this could be one of the targets to cut spending on, as it is the Pentagon's most expensive weapons program, with their $2 trillion F-35 program, and the market certainly reacted to it. In fact, just like many parts of the market, appears to have seen it coming going into the election. There's Lockheed Martin, the builder of the F-35, been trading pretty weak this last month in an otherwise pretty healthy market. In fact, since last October, still down about 14%, which is a pretty big move for the normally large, low volatile blue chip stock. And so here's a quick look at Unusual Machines' latest investor presentation, talking about legislative tailwinds, US-based development, so they're well positioned for the reshoring of production, claiming to be a leader in the first-person view drone market segment, talking about China dominating the drone industry. It certainly helps to have the son of the president on your board and talking it up. That just builds a lot of confidence for potential customers of this company, not to mention investors, partners, employees, suppliers, And the drone market is already growing very well. Expected to be $25 billion this year. It's going to more than double by the end of the decade. Healthy double-digit compounded annual growth rate there. And that's because there's just so many use cases for commercial drones. Everything from insurance claim validations, organ transplant delivery, pipeline leak detection, obviously security, flash flood warnings, and of course military defense. This is what Elon's talking about. Drones are a much more efficient way to engage in military actions. They're much more cheaper and with no risk of human life either. So like AI and robotics, drones are going to touch many industries out there. In fact, we've already got Domino's Pizza having a drone development program in place for years now. And so no doubt in the coming years when you order a pizza, could very well be a drone like this, dropping it in your backyard. And again, it's just part of the secular trend to artificial intelligence and robotics. It's undeniable. And as investors, we have a chance to be a part of this and profit from it as well. And so obviously Unusual Machines is still very early stage company. Very small revenue, hugely volatile, very speculative, no doubt going to have wild swings up and down. I consider these stocks kind of like lotto tickets. However, I like to think they have better odds than a lotto ticket. Or you could also think of it like a call option with no expiry. And if they're burning cash, well then that's the theta. That's the time decay. You could also think of early stage companies and startups that have a runway and their runway is their capital. And if the plane can't get off the ground before they run out of capital, well then it normally crashes and burns. But like I said, it certainly helps when the son of the next president is on the board. So other stocks in the drone industry, or unmanned aerial vehicles, or whatever you want to call them. AeroVironment, 5.4 billion. Kind of just been consolidating for the past 6 months here. Doing a little bit better. Kratos Defense and Security Solutions. Market cap of 4 billion. Actually been in a nice uptrend all year. And getting down to the smaller side of things, Ehang Holdings, although this is a Chinese company. So keep that in mind, more speculative and volatile. Even more speculative once again, Ag Eagle Aerial Systems. This is what they call a nano cap, less than 50 million market cap. Did catch a bid there today, up 42%. Similar story with another nano cap, Dragonfly. Tiny though, 16 million, up 42% today. So obviously there was a bit of a spillover and sympathy trade from Unusual Machines. So like I said, just keep in mind, these are very tiny, speculative, small stocks, likely to have huge volatility. Please don't go putting your whole account into this or anything like that. And as usual, all my content, products, and services are not financial advice. I'm just sharing with you my thoughts, opinion, research, and what positions I may have. And stick with me because I'll show you some of those stocks helping to drive the gains in the stock picks portfolio today. But very similar to the drone industry, eVTOL, electric vertical takeoff and landing, one of the hottest sectors this last month. Ever since the election, these early stage small cap growth stocks have just been lit up, along with the Russell 2000 breaking out to all-time highs. Archer Aviation up another 18% today. Same with Joby, really strong rip this last couple of weeks. Smaller again, Vertical Aerospace. Look at the volumes coming into these stocks. Another interesting one, Blade Air Mobility, 371 million market cap. And here's a look at their website. They're kind of like an Uber for the skies. Fly the future today. Commute by helicopter or seaplane within and around cities and jet to popular destinations. Blade Airport, fly between Manhattan and the New York City area airports in just 5 minutes. Hamptons, anywhere, Atlantic City, shop passes, mountain. So obviously it's like taxis for rich people. Your favorite destination faster. Nantucket, Miami, Palm Beach. Pretty interesting little stock that again could actually use some of these eVTOL making companies to operate their service. So again, this is an industry that's likely to keep growing and growing. Could very well see Uber run eVTOLs within the next decade as well. And with a more pro-business entrepreneurial government, the more likely to loosen regulations on growth industries, get behind them, and allow entrepreneurs to take a bit more risk. And there's a look at a long monthly chart of Blade Air Mobility. One of the hot stocks from 21. It's been knocked over, but like many of these stocks, basing out, breaking out. Certainly one to keep an eye on, because like I said, with the market cap 371 million, again, highly speculative, but no reason it can't be a 10 billion market cap within the next decade, potentially representing over a 20x gain for patient investors. And that's not the only area of the market that's also hot. Some of you guys may remember about a month ago when I did a survey. At the end of that survey, I gave out 10 hot stocks to watch for next year, and a lot of them have been on absolute fire this last month as well, including Red Cat Holdings, small cap software stock, up another 26% today, and one I talk about regularly, and that was also on my top 10 list of stocks to watch, SoundHound AI, one I find really interesting. And again, like a lotto ticket, early stage company, not much revenue, but if they do pull off what they're trying to pull off, there's no reason this company can't be 20, 30 billion within a decade from its current 3.4 billion, even after its huge run, because they offer voice AI products that companies from many industries can use. And let's not forget the other hot sector, quantum computing. Rigetti up another 27% today. Look at that rip in IonQ, steady as she goes. And the nuclear trade still holding on. Oklo there. And along with those volumes we've been seeing in fuel cell stocks, actually did get a bit of a bounce here this week. along with Plug Power as well, defending these lows pretty nicely. And like I alluded to earlier, some of the hot stocks in our stock picks portfolio helping to drive the account to an all-time high today, Hims and Hers Health. And this is what I find fascinating about markets, is how quickly the narrative flips. It was just a couple of weeks ago, the stock sold off 24% in one day on news that Amazon was getting into the telehealth market, in which I came out and said Amazon's done this many, many times to many industries, and they didn't wipe out the pure play leader in the market. And Hims and Hers Health have one of the most popular health apps in America, a pure play on telehealth, booming sales, still a reasonable valuation, up another 6% today, along with another one of my hot stocks, Intuitive Machines. And I just want to make a point, my stock picks portfolio is not full of these early stage small stocks. In fact, less than half of them are like this, with my portfolio beta at 1.22. So I just want to make that clear, my portfolio is not completely leveraged into these highly volatile stocks. I do have some defensive stocks in there as well. But this one has been one of the best ones for us. Now up over 110% since we first got in just a couple of months ago. And here's a look at the website of Intuitive Machines. They're actually helping to build the economy to the moon. The first commercial company to actually land on the moon. So they're going to offer services to and from the moon. And the moon could very well serve as kind of like a layover spot on our way to Mars and beyond. Kind of like a base where they can set up operations. And look at this, it's kind of like Star Trek stuff, isn't it? Pretty cool in my opinion, and I'm happy to be a part of it. And the stock's been doing really well for us. Like I said, space exploration is another secular trend I plan on staying invested in for some time as well. As the industry makes its way towards the huge SpaceX IPO, which could be the biggest IPO of our lifetimes. But just moving on from hot stocks back to the market, we just finished the month of November, up almost 6% on S&P 500. That's the best month all year. And in fact, we haven't even done a 10% correction all year. Did get close there in August. However, that was a great buy the dip opportunity. And so looking back since 1928, on average, most years will have a 10% correction. However, that hasn't really been the case since 2000. This market's been pretty much steady as she goes. Second consecutive year, 20% plus gains. And now we're above 6,000, head and shoulders above even the most bullish end-of-year price targets Wall Street had coming into 2024. The average target was actually 48.61. And look at that, JP Morgan, Wall Street's number one bank, thought we're going to finish the year at 4,200. Almost missed it by 2,000 points. Coming out in front, Yardeni Research, Ed Yardeni, who's likened this period to the Roaring Twenties. An optimistic sentiment that I share myself. And there's Tom Lee with Fundstrat, market even beating his bullish expectation. So it has been a pretty easy year to make money in the market. However, is this rally going to continue next year? Is the market's enthusiasm from the election going to last? What sort of risks could be around the corner? What's going to be our next surprise? We're definitely in a really bullish seasonal period now. Stocks should remain on firm footing throughout December going into January. However, I'd be surprised if we didn't get a little correction or some other volatility event come February, March at the latest, end of Q1. I think most likely tariffs could trigger a bit of a pullback. Of course, if the jobs market keeps weakening, we can't rule out the possibility of a recession. However, I'd say those risks have subsided a lot the last couple of months, along with geopolitical risks. I think have subsided on the whole, and I'll get more into that a bit later on as well, and what we just heard from Zelensky. Inflation, I think, would be the more likely out of these three, because if things get too good and the economy gets too hot, things start overheating. That's why the Fed jacks up the cost of capital to try and dial it in. But the market's already repriced the path of Fed rate cuts, and stocks don't seem to mind. So I think Jay may indeed only have one or two more cuts left in him before going on pause again. And as long as GDP and EPS keeps trending upwards, I don't think it'll be a problem for the stock market. However, corporate insiders are cashing in on these highs, especially in tech, with corporate insiders largely contrarian in nature. They like to buy the dip, sell the rip. However, as annotated on this chart, the ratio of sellers to buyers above 4 in the black boxes here, and in the black circles, cyclical tops in the market, S&P 500. You can see corporate insider selling does peak out even a couple of years before the stock market peaks out. So it's not a perfect timing indicator, like no indicator is all the time. However, this could be setting up for a potential top in the market either late next year or 2026, which if so, would also line up with the Benner cycle, who's an American farmer back in the 1870s, who drew up this graph here. Up the top, A years, years in which panics have occurred and will occur again. The B years, years of good times, high prices, and the time to sell stocks and values of all kinds. And then the C years, years of hard times, low prices, and a good time to buy stocks. Now, like everything, it's not exactly spot on every time. However, it is remarkable some of the years it has caught. Wasn't a bad time to buy stocks in 78, 85, 96, 2005, 2012, and last year. And it wasn't a bad time to sell stocks in 72, 99, 2007, and the panic years as well, 1999 and 2019, just before COVID. I think the next panic will be 2035. However, his forecast says 2026, years of good times, high prices, and the time to sell stocks. And of course, this is just a guess, a forecast. It's not a prediction. But I'd say maybe 26, potentially 27, even 28, maybe this secular bull market can top out, which would mean we've still got another couple of years to make hay while the sun's out. And of course, it'll get more difficult and we'll have to adjust our strategies. But just looking at the presidential cycle of seasonality, I've been following it pretty closely. Year 1, we went up, pulled back in the midterm. Year 3 and 4 have been really good. Presidential election years usually really good. However, then going into the subsequent year, and this chart's based on us having a down midterm year, like we did in 22, typically a bit soft in the first half of the year, maybe a bit of a pullback there, which like I said, I'd be surprised if we don't have one by March, at least a good 5-10% pullback for whatever reason. And since we have had 2 hot years up more than 20%, and we're going into the third year of the bull market, historically the third year can be a little softer as well. So I wouldn't be surprised if this kind of plays out as well. We have a bit of a pullback Q1 into Q2, maybe bump around a bit, then just rally up into the bullish seasonal period, and maybe we finish up 5-10%. That would be my guess. But of course, anything can happen. That's why we always follow the tape. But going into the busiest spending period of the year, where a lot of retailers make all their profits, so far so good. Things are looking pretty good. Just got the latest data from Adobe. Top level insights showing increased online activity, but with a growing preference for flexible payment options. Buy now, pay later. Total spend so far this month, $96 billion in the States. And so far this year is tracking well above last year. Consumer spend during the holiday season, $240 billion. Last year, $222. And revenue by day, there's the Thanksgiving Thursday, $6.1 billion Americans spent on retail goods. And there's a look at the Thanksgiving this year versus last, $6.1 billion versus $5.6 billion. There's about a 10% increase year over year. Pretty good. It's like I've been saying, the discounts and prices on electronics, toys, and apparel, they're dipping at the moment. And like I've been saying for the last week, not a bad chance to buy that dip on many of these goods, as we don't know what tariffs are going to do to them. So the risks are to the upside, as we're potentially looking at global tariffs with a target on China as well, where a lot of these goods come out from. And I got some interesting data and charts for you guys today I thought I'd share with you. From made in Japan to made in China, 1998, Japan had over 21% share of the global passenger car production market. Now 11.4. Look at China, 38.4, just over the last 25 years. I'm sure a lot of you remember how big Japan was back in the 1980s, going into the 1990s. I remember at school being taught Japanese in the 1990s, as it was considered very important to know. But look how small China was back then, 1.4%. Explosive growth over the last 25 years. And here's another visualization of how that's actually accelerated since 2020. Top car exporters in the world, China, 5.7 million cars exported this year, overtaking everyone else. And that's why I said it's been remarkable that Tesla has held up as well as it has in the face of all those cheap EVs. Here's another one for you. US exceptionalism in fund flows. 1.1 trillion inflow into US equities decade to date since 2020 versus 233 billion for the rest of the world, Europe, Japan, emerging markets. United States has attracted 4 times as much capital as the rest of the investable world. Again, huge structural tailwind, and why the states have a premium valuation, and it's kind of the home place of global innovation. And look at this chart here. The United States now 73% of the MSCI index weight, coming in second, Japan 6%, UK 4%, Canada, France, Germany, Switzerland, Australia, so on and so forth. No chart shows US exceptionalism better than this one. Simply incredible how dominant the states are when it comes to capital markets, which I would say, along with the US dollar reserve currency, is one of their key strengths and advantages. That shouldn't be lost either. Here's another one for you. One of the best traders to ever do it. Also happens to be a lifelong politician, Nancy Pelosi. And her latest portfolio, NVDA, Apple, Broadcom, Alphabet, Palo Alto Networks, CrowdStrike, Microsoft, Tesla, Amazon. So you can see she's betting on semiconductor chips, the internet, cybersecurity, and other dominant businesses as well. And another one, the price of an average daily lift ticket for big mountains over the last 50 years. Any guesses where private equity came into the industry? You got it, right around here. $300 to ski in Park City for one day, and you can actually invest in some of these resorts. Vail Resorts, ticker MTN, Mountain, 6.7 billion market cap, bit under 5% dividend yield. It is going out to a monthly chart on Mountain. Has consolidated for quite a few years now. Was one of the best performing stocks. After 2012, however, it's been a bit of a downtrend, missing a string of earnings as well. Getting a sharp pullback in bond yields today. It's funny, we've seen all this action we got in the shortened trading day. Market closing at 1 p.m. Same with treasuries closing at 2. But look at that in the 10-year. Fallen a healthy 7 basis points today, 4.18. Giving a little bit of a pullback in the dollar as well. A little bit of a bump back up in gold. And we also got news today, OPEC Plus likely to delay output hikes. Expected to further delay its planned output hike by at least 3 months, providing support to oil prices. And there's a look at crude oil, just kind of bumping around. I think vulnerable to break this key support zone. It keeps getting tested, keeps getting tested. The more it gets tested, may just indeed cut right through. As the new admin is very pro-oil, they want to pump it out at even more records, and that's going to further help economic growth as well. Because oil literally greases the wheels and the engine of the economy. And we just got news from Ukrainian leader Volodymyr Zelensky. I'll give up Ukrainian territory to Russia to achieve peace. Well, there we have it. This is what we've been saying the whole time. It was always inevitable. The current admin's strategy would have this war dragging on for another 20 years. The end result is just the US taxpayer wasting hundreds of billions of dollars, not to mention the hundreds of thousands of innocent lives from both Ukraine and Russia lost. And just as Putin's been indicating for over a year, he's willing to come to the table and negotiate an end to this as well. And so hopefully a peaceful deal can get done. And again, that just dials down geopolitics. Could put some downside pressure on gold as well as oil as it takes out the risk premium from those markets and potential threats to supply. However, this is still easier said than done because he still wants NATO to take part of Ukraine territory, which I don't think Putin is likely to agree to, as that's been his biggest grievance for over a decade now. NATO's continued push up against the Russian western border, which was initially promised to never happen. But anyway, we'll see how all that unfolds. We also just had news. Chinese ship crew suspected of deliberately dragging an anchor for 100 miles to cut Baltic cables. Now got NATO warships surrounding this Chinese bulk carrier at the center of an international probe into suspected sabotage. Not sure if done on purpose what the objective is here. Maybe a test of what they could get away with. Certainly presents a risk to a lot of us now who rely on the internet. And if there was an escalation in global wars, they could very well get cut, as there are obviously so many out there, they can't all be guarded. But we also just got news today, Meta wants to build a global undersea cable for $10 billion. They want to build an exclusive connection connecting practically an entire world, which I would think would be a good move. Diversify the infrastructure from not just the government's oversight, but also private sector, probably do a better job at it. And once again, Zuck looks to own the hardware underneath his apps as he builds out his much bigger, grander plan. With Meta too, also having a great year, not too far off all-time highs, and they certainly have the cash to do projects like that. Also, just getting more news out today, stocks could soon trade through the night after an exchange wins the SEC approval. This is a startup called 24X National Exchange. Be open to both retail and institutional investors looking to trade US equities anywhere in the world via broker-dealers. First part will be open the second half of 25, the exchange operating from 4 a.m. to 7 p.m. And the second stage, we'll see it go out to 23 hours. And this is just a long secular trend of all trading to go 24 hours. But there'll always be an official open and closing auction where the exchanges match all the bids and offers to print one price that can trade the most volume, find a midpoint for the market. And that's because a lot of financial products, mutual funds, index funds, and the like use open and closing prices to calculate their net asset value, their NAVs, amongst other things as well. However, again, just shows how advanced US markets are, how accessible they are, and it's only just going to boost market pricing and liquidity as well. And also a bit of fun today, I've got to give post of the day to Ramp Capital, who posted on X. I'll spend 3 hours reading Amazon reviews before committing to a $10 Black Friday deal, yet not a single hour of due diligence before dropping $10,000 on a stock. And let's all admit, we've probably all been guilty of this one time or two before, right? Here's another one for you, a meme. One must go. Turkey, stuffing, cranberry sauce, green bean casserole, the Fed, bread, mashed potatoes, sweet potato casserole, or pumpkin pie. And I'm sure you guys can guess what my answer would be. Green bean casserole. No, I'm just kidding. It's the Fed. The market should determine interest rates, not just one human being. And speaking of interest rates, the market is guessing that one human being is still going to cut 25 basis points when he meets with his team a week before Christmas. More importantly will be his language and indication whether he's thinking about going on pause soon or not. Guess it all comes down to how he's feeling that week. And there's a look at the VIX index, now down on a 13 handle. And nice to see for the first time in a few months, volatility risk premium going negative. Option dealers requiring less of a premium than the realized volatility to write contracts. That's a good sign for the market. Not to mention bond market volatility coming down and high yield spreads over treasuries. Still very low here, 2.69. Current forecast for the stock market, smooth sailing until we inevitably get that next surprise. Sector breadth green across the board, no red, with plenty of strength across the board in all time frames. Since it's the end of the month, there's a month sector performance chart. Discretionary out the front, 11.5%, small caps, financials, energy, communications, and industrials. Down the bottom, healthcare, materials, tech. And there's a look at my S&P 500 oscillator, just pulling back a bit from those technically overbought levels. However, this could be shaping up for a bit of a grind higher, where the oscillator just goes overbought and kind of stays there for a little bit. So I'd say unless the S&P 500 takes out this 59.60, maybe 59.40, or a little bit lower, the market could be on firm footing for the rest of the year. Certainly looks like that, looking at market color as well. With volatility and yields and oil coming down, they're pretty good tailwinds for the here and now. And like I said, good to see the retail sector and stocks breaking out going into the holiday period and in the face of potential tariffs as well. And one of the clearest signals the market can give you is when it rallies on bad news. And so that's a pretty good sign to me for retail stocks and the market's interpretation on consumer spending as a whole as well. Otherwise, it looks like we're continuing to drift higher. And that's pretty much a wrap for the daily market review this week, guys. Thanks very much for tuning in. I hope you enjoyed the video today. And like I said, anybody else who wants to jump on board my new swing trading alert service and follow my real money trading account, get all my alerts before I trade them. Now is your last chance, as there's only a few spots left, and I expect them to all be gone tomorrow, and then it will be closed to new subscribers. And if you're interested in getting any other Click Capital products and services, now's a great time to do it as well, as we're offering a permanent 33% discount on all products using coupon code SWING33. Click the link below this video and head on over to clickcapital.io to learn more. Thanks very much, guys. Have a great weekend, and I'll see you again Monday night. Cheers.